Hey guys, I want to go over the 9:30 to 10 o'clock opening range, the New York opening range on May 26th. I want to show you where it's a little modified version of the 2022 ICT Mentorship Model, and I want to show you what you could have used instead of the fair value gap. So what we see here when we start, the 9:30 to 10 is this dark gray shaded in area. What you see looking left is you see a volume imbalance. Okay, so what does ICT teach us? He tells us that price will either go to seek liquidity above an old low or an old high, or it will go to rebalance an inefficiency. Volume imbalance is inefficient. It needs rebalancing, so price comes in, trades through it here, closes it in, and then trades through it on the next candle and out and leaves it. And price trades up, breaking a market structure shift right there. Doesn't take out this, it stops before taking out this higher time frame, 15-minute drawn liquidity. It stops there and then takes it out the very next candle. So let's move that here. I'm going to change that to short-term high cleared. Clears an old high, takes liquidity, rebalances, comes up here. Now we're looking for the 2022 mentorship. We're looking for a fair value gap. We get one. Okay, so we can, if we took our trade, where would we be shooting for? Well, here's another 15-minute, a higher time frame, old high, and then here's an old high, a higher one. So there's your higher term drawn liquidity, and you also have these new week opening gaps. So you definitely have places to draw to. So where do you take your trade? Right on the fair value gap right there. It goes below the first candle right here, and there is a 3-to-1 ratio trade right there with our targets. You take your first partial right after you clear this, and then you could follow it up the rest of the way. Okay? So let's say you didn't take this trade. All right, I'm going to take this one off here just so you can see it. What's a better entry? Well, if you throw the fib on there from low to high, optimal trade entry right here is 70.5. Right here, it goes right down there to the tick. It doesn't get any better than that. You could have put your entry, just on the 62% range. Gone down here below that candle, right there, would have had a 3 1/4 handle stop, and you could have had 5R here. So 16 handles move right here. It's one over right there, because that's what we could have seen. It was all following the same logic, but instead of using the fair value gap, we used optimal trade entry instead, and we got a better risk to reward ratio, and we got more R because going for the same distance or similar distance, but we had less of a stop because we were risking less for a better trade. Okay, so there's your two options. I'll put them all on top of each other right there for the New York Open on May 26th.